Hey everyone, let's talk about Walmart. As the United States moves towards another recession, Walmart's empire is silently crumbling down. And that's what we're going to be talking about today. When you're the world's biggest retailer, even a 1% drop in earnings can translate into billions of dollars in losses. So buckle up because we're about to dive into 20 alarming signs that Walmart might be in bigger trouble than they're letting on. And with that said, let's get started. The first sign things might be going south at Walmart? Their own predictions. For the final quarter of 2022, Walmart expects a sizable decline in profit margins. As costs climb, people cut back on spending, and giants like Walmart feel it. Small decisions by millions add up to lost revenue. The bigger they are, the harder they fall.
Now, let's talk numbers for a second because that's where things really start to look a little grim. Walmart announced that it expects adjusted earnings per share to fall by 9% this quarter. And if we compare that to the same time last year, we're actually looking at a potential 13% drop. Essentially, what this means is that for every share of Walmart stock, the company is making less money. And when a company starts making less money, well, it sets off a chain reaction that can be pretty unsettling for everyone involved.
Okay, so you know how I said the earnings report raised some eyebrows? Well, it actually did more than that. Walmart's less than optimistic announcement caused a big market reaction. Shares plummeted by 8% in a single day. A drop that's steep shows investors are concerned about Walmart's future.
Stock performance below moving averages. To make matters even more uncertain, Walmart's stock is still struggling to recover. It's currently trading below its 50-day moving average, which is kind of like the stock market's version of a fever. If a stock is consistently trading below this average, it usually means investors are hesitant, to say the least. They're waiting to see if the company can turn things around before they're willing to fully commit.
Steepest one-day decline in May. Let's rewind back to May for a second. Walmart shares plummeted by 11.7% in a single day. This historic drop was a wake-up call for the retail industry. Even giants can stumble, impacting everyone.
Year-over-year decline in profit. According to Gap data, the retail giant reported a 24% year-over-year decline in profit per diluted share. This means that compared to the same time last year, Walmart is making significantly less profit for each share of its stock. And that's not just a blip on the radar, that's a trend that's hard to ignore. It's like if you were used to finding a $20 bill in your pocket every now and then suddenly you're only finding $5. And this brings us to another alarming sign: negative cash flow. Now, cash flow is the lifeblood of any business. In the last quarter, Walmart didn't generate any cash from its operations. In fact, it actually consumed $3.8 billion. That's right, instead of making money, they were spending more than they were bringing in. And unfortunately for Walmart, that's not a sustainable situation for any business to be in for very long.
Now you might be thinking, okay, one bad quarter, it happens, right? And normally I'd agree, but the thing is, this isn't just a one-time thing for Walmart. The IBT stock checkup shows that earnings have actually fallen for the past 3 quarters in a row. We're talking about a consistent downward trend with an average decline of 4.5% over that period. It's like if you went to the doctor and they said, well, your blood pressure has been a little high for the past few checkups. Walmart's cash flow is in the red. Why? Executives admit the problem is their inventory. They spent heavily stocking up in the first 2 quarters, but that bet didn't pay off. Now they're stuck with warehouses full of unsold stuff.
And speaking of groceries, that's another area where Walmart is feeling the heat. Between July 2019 and July 2022, Walmart's grocery prices shot up by a whopping 21%. Now, some of that increase can be attributed to inflation, which has been affecting prices everywhere. But even when you factor in inflation, Walmart's prices have still climbed higher than many of its competitors. And when you're known for being the low price leader, that's not a reputation you want to lose.
And this brings us to a very important point. Walmart is facing some stiff competition, and they're not always winning. For years, Walmart's biggest advantage was its ability to offer rock-bottom prices. But in the age of e-commerce, that advantage is slowly slipping away. Online retailers like Amazon don't have the same overhead costs as traditional brick-and-mortar stores, and that allows them to undercut Walmart on price, especially when it comes to things like electronics and home goods. And speaking of brick-and-mortar stores, remember those? Yeah, well, those aren't doing so hot either. Walmart has noticed a significant decline in foot traffic, particularly at its supercenters. People just aren't as eager to wander through those massive aisles anymore. And that decline in foot traffic has translated into a decrease in same-store sales, which is a key metric for retailers. And for Walmart, those numbers have been going down, down, down.
So, what happens when a company starts to see a decline in sales and foot traffic? Well, often one of the first things they do is cut back on expenses, and one of the easiest places to cut expenses is, you guessed it, employees. This past year, Walmart's seasonal hiring total was down a whopping 73% compared to the previous year. They only added about 40,000 seasonal staff members, which is a significant drop. Fewer employees mean longer lines, emptier shelves, and a less enjoyable shopping experience overall. And it's not just seasonal workers who are feeling the pinch. In August, Walmart reportedly laid off approximately 200 corporate employees. Now, 200 people might not seem like a huge number when you consider that Walmart employs over 2 million people worldwide. But it's still a significant move, and it suggests that the company is serious about streamlining its operations and cutting costs wherever possible. And when a company starts making cuts at the corporate level, it can create a sense of uncertainty and anxiety that trickles down throughout the entire organization.
And speaking of storms, let's talk about the supply chain. Remember those supply chain issues that everyone was talking about a while back? Well, they haven't magically disappeared. In fact, they're still causing major headaches for retailers, including Walmart. Walmart's supply chain is a complex web of suppliers, manufacturers, and distributors all over the world. And when one part of that web breaks down, it can create a domino effect that impacts everything else.
What does a company do when facing declining sales and rising costs? Sometimes the answer is to scale back, and that's what Walmart has been doing. In 2 years, Walmart has closed 160 stores across 27 states. It's a significant number, indicating a shift in strategy.
It's not just permanent closures raising eyebrows. Walmart has temporarily closed hundreds of stores recently, often attributed to plumbing issues or remodeling. Some speculate there's more to the story. Could Walmart be testing the waters with these closures? And the closures aren't just limited to the United States. Globally, the retail chain is closing 269 stores as it exits the Walmart Express pilot program. This program was Walmart's attempt to compete with convenience stores by opening smaller, more localized stores. But it seems like the experiment didn't pan out as planned. And when a pilot program fails, sometimes the best course of action is to simply cut your losses and move on.
For decades, Walmart has reigned supreme as the largest retailer in the United States. But that title is now under threat. Amazon is hot on Walmart's heels and may overtake it soon. Walmart has made strides in e-commerce but still lags behind Amazon.
What does this mean for Walmart's future? Walmart's traditional model is weakening. E-commerce, changing habits, and a volatile economy pressure the retail giant to adapt. The entire retail industry is transforming. Only time will tell which companies will thrive. We're witnessing a seismic shift in retail.
So, there you have it. 20 signs that Walmart might not be as invincible as we once thought. From declining sales and store closures to supply chain issues and increased competition, the retail giant is facing a perfect storm of challenges. Will Walmart weather this storm and emerge stronger? Only time will tell. Thank you for watching. If you found this video insightful, don't forget to give it a thumbs up and subscribe.